Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. A great episode in store for you today. Anthony Power and I are joined by the COO and president of BUZZ HPC, Craig Tavares. This is a subsidiary of HIVE Digital. Really looking forward to taking a deep dive look into the inner workings of their HPC and AI strategy. Before we get into it, take a second, hit the like button, guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below if you have any additional questions for Craig and the team, and if you're currently holding shares of HIVE Digital Technologies. With that being said, let's get into today's video. Okay, guys, away we go. An exciting podcast today. Going to be focusing specifically on BUZZ HPC, a subsidiary of HIVE Digital. We have the president and COO, Craig Tavares, on the program for the very first time. I know you guys have had the pleasure of meeting in person. Craig, this is our first time, so thank you so much for making the time and looking forward to the discussion.
No, I'm really happy to be here. Thanks for having me on, guys.
Hey, now we were saying before we started filming, we're really trying at Power Mining Analysis to start looking at HPC AI as its own vertical, as a lot of companies are really starting to explore, push the envelope here. I know Hive and BUZZ HPC have really been at the forefront of this. You guys have been in the HPC space for quite some time. So can you give us an introduction of yourself, Craig, and then how you got involved with Hive or ultimately BUZZ HPC?
Absolutely. So I started my career in telecom in Canada. So I'm based in Toronto. I cut my teeth building infrastructure really straight out of school, building internet service providers and telcos from the ground up in Canada. And that quickly led into building data centers with some of the larger service providers in Canada as well too that had an ambition to go international. So we acquired and built for extended time period between 2010 to 2020. Built about 20 data centers in my fleet. So these are traditional tier 3 data centers for enterprise workloads. And then when you were in data center, you quickly found out you had to be in cloud, and cloud at the time was really around data center operators, providers, in my case, being able to build virtualized supercompute stacks that could host workloads for domestic or regional companies. So if I was in Canada and I had a data center and I put a bunch of servers in that data center, I can use it as a shared compute platform to host a customer's application and build for them. This was the advent of cloud computing. It's when AWS and Microsoft got into the market that they kind of ate the whole world with their hyperscale platforms, right? So that it's very profitable for a period of time. And then as a cloud operator, data center operator, what you had to do is pivot and then move into services. So it's not that you were going to go compete with all the hyperscalers. Instead, you look to complement what they were doing by offering services on top of their platforms. Or in markets where they didn't exist, there was still an advantage of offering your cloud platform because the key thing you'll hear about today is around being able to maintain data sovereignty. So coming out of hosting and running public clouds, I went to Apple for a bit to help with their hybrid data center strategy, which means, I was really looking at evolving their owned data center platforms, and then, working with AWS and Google at the time too to deliver applications. Went into energy for a bit, where we bought and operated power plants in Canada and built one of the first directly connected high performance compute data centers connected to a wholly owned power asset. After that, did a bunch of board work, and that's where I met Frank Holmes, who brought me on as a board advisor for their GPU cloud and HPC business. And, getting to know them, it was really an easy decision to join full time. So I joined BUZZ HPC as president COO earlier this year. BUZZ HPC is you guys know, a wholly owned subsidiary under Hive, and I'll be delighted actually just to talk about the genesis of BUZZ HPC, why Hive did it, and obviously why I came on as executive earlier this year.
That's awesome. I was very fortunate to meet you. I think it was maybe last October, when we traveled to Sweden together to go and see one of your data centers, a number of your data centers over there. Literally just a stone's throw away from one of the largest data centers in Europe, the Meta data center, formerly known as Facebook. And that was a really impressive day to go and see those sites, to be at a facility with seeing the GPUs in action there. But can you tell us from a locality perspective, if Sweden's not the only place you're operating at the moment, where else are you currently operating, and is there any plans to expand into other areas?
For sure. So BUZZ HPC again was predicated on really having a fully vertical integrated view to deliver compute for AI, other high performance compute workloads, such as scientific research. And the foundational element, Anthony, that you called out was again the owned assets that Hive has within their portfolio. So these owned assets are land and power at scale, but 100% hydroelectric energy, by the way, again, when I say owned energy assets. So, we contract in areas and build in areas where there's abundance of hydroelectric energy for a few reasons, and obviously sustainability being one of them. The other one is the cost of operation. But yes, Sweden was a primary market for us because we had access to this type of renewable energy. And then obviously contracting and buying property in those markets made sense for us. So that was the foundational piece that I'm describing earlier that you need going across multiple industries. In this case, again, when you look at the technology industry, if we look at data centers, whether again it was for blockchain or Web3, and the purpose of crypto mining, or whether it's today now looking at again, data centers that host, general workloads and what the hyperscalers did for many years, building these mega sites predicated on access to power in certain markets, now evolving into AI, which again has redefined, the data center itself, and I'll talk about that a little bit. Still relied on these common denominators. Again, it was really land and power. So having those assets in Sweden was key to being in that market. And then Canada is the other market that we operate in. So Hive and BUZZ HPC are Canadian entities, and BUZZ, and I'll talk about this quite a bit, is again a sovereign AI cloud and data center provider. So it's important to kind of understand what that means, and I'll unpack that just in a second. But we do own property and assets in New Brunswick as well. We host in tier 3 data centers in Quebec. So again, similar markets to Sweden, where again we have access to abundance of hydroelectric energy. And as you guys saw earlier, we just acquired an asset in Toronto. So, we're kind of expanding that footprint in Canada as well too, to kind of really hit home on the sovereign piece. And sovereign means, you're operating in a nation, as in this case it's Canada for us, as a Canadian entity that owns and operates its own infrastructure, right? And that's important because as a nation, what you want to be is immune to any foreign influence. So there's things like data privacy acts. There's again, you heard me mention data sovereignty and why it's important to, as an enterprise or government, why it's important to make sure that your data stays within the four walls within your nation's borders. And it also means any kind of digital operations independence as well too. So, while brick and mortar and land and power are important to develop a data center and maintain sovereignty of a data center, everything that goes in the data center is important too. So what BUZZ HPC does is we buy very large supercomputers, and in this case, they're NVIDIA GPUs that we put together to deliver accelerated compute platforms. So when you hear the word cluster, it's a bunch of these servers put together and almost connected with a high-speed network connection on the back end of it to create almost the single industrial system to deliver the fastest compute power in the world. So in Canada, BUZZ HPC delivers probably one of the fastest supercomputers to market at scale. And then Sweden is the same thing. So we've been doing this for a few years now. The legacy of Hive not only was built around, access to cheap renewable energy, but it was also built around the legacy we had in Ethereum mining. So in Ethereum mining, we use the same technology at its core, which was a GPU processor, right? And coming out of this Ethereum merge, we were already operating over 135,000 GPUs across the world. So like when I talk about scale, that's massive scale, right? That led us to transform the business. So, I think you guys caught the tones of the market already where, you look at the CoreWeaves of the world where they started on this, really from the same route and then migrated and transformed over the many years to become, really an AI cloud and AI solutions operator. So, it wasn't a very different transformation strategy for BUZZ, except for the fact that, again, we owned and operated our own facilities from day one. So again, when you think about vertical integration, it's everything from the power, owning the land, to owning and operating the data center, right through up to the GPU clusters, where again we host those NVIDIA chips, and then put our own cloud operating software on top of it. So the cloud operating software is a layer that allows customers around the world to use our platform in a self-service way. So that, you know, is complemented by 24/7 support, 365 days of the year. It's complemented by a guarantee that we offer, which is called a service level agreement, and or an SLA. And what we're saying to the market is, hey, like we are going to guarantee our performance, we're going to guarantee reliability, and when you need help from us, we'll respond within a certain time. Right. So again, those are super important qualities when you think about the transformation of who we were as a crypto miner. Now, BUZZ HPC again was an entity that was formed really to scale the GPU cloud business and data center business as its own sort of entity with again a very specific focus of delivering again top tier services for AI platforms in the market.
Just
That's
before Bryce goes to the type of HPC strategy, can you just talk about the locations that you're currently in and what we're seeing, obviously, from the Bitcoin mining space? The miners coming out and saying a lot of curtailment at the moment because of weather conditions. The locations that you're in at the moment, what type of uptime are you having there in terms of electricity? Are you getting close to maximum availability?
Yes, 100%. So here's a cool thing about what we call tier three enterprise data centers versus what we used to know as crypto data centers. We build data centers to a little bit of a different standard, and that standard is 100% resiliency and redundancy. So, while it costs anywhere from 350 to $400,000 per megawatt to build a tier one crypto mining facility, we spend approximately $8 to $11 million USD per megawatt on a tier three facility. Why? Because we ensure that there is no single point of failure in the facility in every regard. That means power is 100% reliable, where for every kilowatt of energy that we take from the grid, we have a backup generator or battery backup, and I should say not or, but and battery backup to ensure 100% uptime. So if grid power, for example, wasn't available, then we would swing to our battery backup and then generator, or we would have two independent power feeds in some cases, which, create that class or tiering of a data center. And then the network side, it's not good enough that again we have a even two redundant connections for the network connections, and now you're getting into really diverse layers of service provider connectivity, where I do want always a minimum of two diverse connections so that no network connection that goes down would ever affect the other one. But I also want two service providers, and I want service providers that have the lowest latency. I want to be in markets with the lowest latency. When I say lowest latency, it's the time it takes for a user, whoever my user is, to access the servers in my data center that I'm hosting. And the other part too is bandwidth and capacity. So if you look at what we used to do on the crypto mining side, it was good enough that we could get, even in some cases, satellite uplink that could support a couple hundred megabits, or fiber connection that could support 1 gigabit in a AI data center, HPC data center that I'm building. At the very minimum, I start at 100 gigabits per second, right? On two independent fiber optic links with, naturally at least two service providers, so that if one service provider had an issue, that, again, I'd still survive on the other connection. And so this goes way beyond just even the fiber optics itself, right? So yeah, I wanted to change. I just wanted to set the table on that one. But and then to your question, Anthony, just again in the markets and locations that we operate in, we're very happy to be in Bowdoin because, as you pointed out earlier, we're down the street from the Meta data center. Well, guess what? Meta spent lots of dollars and time improving the network connectivity for their own use in that market. So we get to enjoy that, right? They invested millions and millions of dollars upgrading the networks there. So yeah, that when I say geographic location and appropriateness of your market location, that is a perfect example that you highlighted as to why Bowdoin is such a prime location for HPC. And then it's the same thing, the same philosophies that we follow in Canada, which is our other market that we're building supercompute platforms in. It's around, why would I want to be in Toronto? Well, Toronto has one of the richest fiber optic and network footprints in Canada that connects it to global markets, international markets, and the domestic markets. So again, it's that quality of the network that we really look at. And as we get into different type of applications, I'll explain why that's important. But yeah, really the data center itself, think of it as, a structure that will host hundreds and thousands of customers and different use cases. It's not likely that every single customer has the same use case. So typically the common denominator for those customers is, how good is the network connectivity? How great is the reliability? And then, yes, what markets are they located in terms of the service availability and where I need to be as a business?
There you go. Location, location, location. Now, I had a specific question about the Toronto data center we'll cover in a second here, along with some of that government contract or data sovereignty that we've mentioned. But before we get into that, Craig, can you talk to us about the overarching strategy at BUZZ HPC? We've seen a lot of these, well, a few of these contracts come out now. Some are more powered shell, some are on demand, some are cloud AI. Can you talk to us about why BUZZ HPC has chosen this strategy specifically, and how maybe it compares or contrasts to what we've seen from TeraWulf or Core Scientific?
Yeah, for sure. So one, again, BUZZ HPC again is extremely adamant to build and operate our own data centers, right? We're not going to deviate from that. In markets or in geographies where it makes sense to partner, we decide to partner. So it's not that you have to choose and go with one strategy, and only one strategy is, own and operate your own data centers versus use somebody's data centers. It makes sense to partner when there's, again, a time to market need where you need to go really quickly, or where, again, there's an established partner in that market that, has some kind of reciprocal value, and being in that market is value to your overall, I guess, revenue stream or your overall product. Our overall product, our key product right now that we deliver to market, is obviously our AI cloud service, which is based on, again, all those GPU clusters that we own and operate. So yeah, partnering with folks, again, in Canada, especially, we get broader geographic coverage across the country, and we get broader access to a bigger customer base. So that's one thing I'll share with you. On the other side, yes, again, in key markets where, again, we decided to really double down, and Canada and Sweden being two of those markets, we are going to continue to build and operate our own data centers. And inside of those, we host our own GPU clusters and our own AI cloud, and we'll continue to sell and monetize those, for near and long term into our future roadmap. So hopefully that kind of qualifies the build versus partner side of things. And then when it comes to the GPU clusters themselves in our AI cloud, we'll continue to grow at a steady pace, quarter by quarter, adding the latest NVIDIA technologies to our fleet. We already operate Ampere and Hopper GPUs, and in Q4 this year we'll be deploying the Blackwell GPUs.
Sorry, just in terms of that, you mentioned this cluster quite a few times now. There's no sort of like a determined amount of GPUs that make up a cluster. I'm assuming it's a group of machines, and it can be any particular size, or is there a given size per cluster itself?
Yeah, again, clusters come in all different shapes and size. It really depends on the customer demand. So while I say cluster, again, that's the idea of combining two or more servers together to create, sort of a single platform for the customer to host his application or his workload. And yeah, typically, again, you'll see anything from 4 node to 8 node clusters, or 8 servers put into a single cluster, up to hundreds of servers in a single cluster. So again, yeah, the size of the cluster is really determined by the customer need, and they could need it for building a small model versus folks that you hear in the market today building what we call foundational models that need tons of compute power because they have massive data sets they need to ingest, and they're building elaborate complex systems and neural networks for those models. So I think that again really underpins what we're trying to do is, we don't try to fit any one customer into a box. Rather, we're highly flexible, we're highly customizable to allow the customer to say, hey, either I need what we call bare metal, Anthony, and bare metal is really just us taking the raw server and then allocating it, giving it to the customer, versus like what you'll hear sometimes is like a managed Kubernetes environment, and that's giving the customer some level of software on top so they could abstract and use the servers without going through the complication of deploying their own operating systems and software on the server itself. So that really kind of supports, again, another part of our go-to-market is that broad range of services and capabilities, versus, again, the different types of contracting structures that we have.
Yeah, just fascinating to hear how intricate and detailed this stuff is. Now, I wanted to double down, as you say, on the Toronto data center. This is the financial and technological hub of Canada. You guys mentioned that you've just purchased this 7.2 megawatt tier 3 data center in that facility. What's the plan for this location specifically, and why does the location of this facility matter so much to BUZZ?
Well, again, that location being in Toronto is at the epicenter of a lot of the well-known AI institutions and universities. So again, U of T sort of staked its name on the global map when Geoffrey Hinton, one of the godfathers of AI, came to teach at U of T. So it really created a catalyst for a lot of smart and some of the most amazing minds to kind of converge in Toronto at U of T at the time. We also have some amazing institutions in Canada, across Canada too. So Mila was one of the first AI institutions that really carved a path for everybody out of Montreal, and then we saw really Vector Institution, one of the larger again Canadian institutions around AI, really start to develop and create some amazing research around AI. And then Amy in Alberta was the other one. So between those three, again, they've really, they're really highlighted sort of on the global map, where people recognize them by name and they recognize the work that's coming out of those institutions. And then we have such great universities again across Canada that are all contributing to this AI effort. So academically, yeah, Canada certainly again has like one of the top spots in the globe. Outside of that, when you think about the infrastructure, Toronto as a market again has been a hub for countless service providers to kind of converge on. So it's a great gateway to all of the Americas, and then it's a great gateway to international markets as well too. And then domestically, pretty much every network, if you follow the fiber maps and you follow how all the networks are connected, they all converge back to Toronto. So for that reason, having a data center in Toronto means that again you have access to all these high-speed networks. And then the last point really again is just again access to talent and ease of access. So again just Toronto as again a business hub within Canada, you do have a lot of companies and enterprises and organizations that sit in the Toronto market. So when you think about a company that would like to again have their application or their data center really close to home, it makes it easy for people just to really think about that from a geographic sense. But the you know the primary purpose of that facility for us is really to host again our own GPU capacity. So in 7.2 megawatts, we could easily host two large clusters of Blackwell chips. And when I say two large clusters, that's up to just over 2,000 GPUs to kind of frame it for you guys, right? So again, a decent amount of GPUs out of one center. And the idea there is, certainly while we started at 7.2 megawatts, we have the ability to expand that and scale that because it's part of a high capacity utility grid that supports a lot of the neighboring businesses. And for that reason, again, the utility really put a lot of investment into that specific market or that specific grid demand. So yeah, the ability for us to actually double the size or triple the size becomes really easy when the grid capacity itself supports it.
Now, that Toronto facility, obviously, that's a big city, a lot of technology there. The site that we saw last year in Boden, it's a bit remote in the very north of Sweden. Obviously, we've got the Meta site just down the road. Who's your sort of like your customer base there, and is the fiber? I suppose the question is the fiber travel well to meet the requirements, maybe within Europe or even extend further than that? Because we're always hearing from potential HPC sites, they need to have water, they need to have good fiber connectivity, etc., etc. So, what was the attraction in North Sweden? I know that the hub up there, in terms of the university and there's quite a decent amount of technology companies set up there, but it's still quite a remote location.
Yeah, no, for sure. Again, in terms of travel time, yeah, you're a flight out of Stockholm in most cases. But I would say the benefit that we have there is we're not building network infrastructure from the ground up. Again, it was actually Meta that developed the rich fiber network up there, and we're really piggybacking on that. So yeah, the speed or the connection time to that facility is again certainly within a desirable latency figure. And if you look at most applications today, if there was maybe one or two applications where somebody said, no, I need a very strict response or latency time, maybe it might not be suitable for that location, but the other 8 out of 10 applications is perfectly fine. So again, you're kind of looking at time and place too, because our time to market with that data center gives us an advantage just because again we have the facility, again it's wholly owned, we could scale within it, therefore I could build it quick, right? And building it quick is the name of the game today, Anthony, right? It's all about, hey, I'm in a race, and the fastest I get capacity, the fastest time I get capacity online means that I maintain that market advantage. So that's the situation for every data center that we see in the market today, and then it's also the situation for the GPU cloud providers as well. And as I explained earlier, for us, the data center enables the GPU clouds. So again, they're very intertwined and interrelated.
Interesting. Now, the next question, data sovereignty. We've heard this term from a number of our miners on the channel here, DMG specifically talking about it as well. Even the Trump administration in the United States, data sovereignty, protecting data within a nation's borders, paramount importance right now. So can you talk to us a little bit about the demand for this type of government type of contract in
Yeah.
Canada versus the US?
No, for sure. I mean, yeah, I think you hit a good point there because every country has a little bit of a different perspective on sovereignty. But let me just go back and say why it's important. First of all, again, we've seen again certain times throughout the year where there's been a global GPU shortage. So, we just see increasing demand exceeding supply in some cases, and everything comes in peaks and valleys. But in some cases, again, I remember seeing like major cloud providers with like 12-month wait lists, depending how much capacity you needed, what kind of chips you needed, obviously. But yeah, it's that scarcity issue that really frightens people. And then when you think about the enterprise AI workloads that are growing, the growth rate for those, and this is where again today's market, there's a lot of researchers using the platforms. We see a lot of scalable startups and a lot of venture consuming all the GPU clouds today. But enterprise is this behemoth that's really just starting to get into the market now. So we're expecting to see like a 10,000x increase in the next 4 years of demand, right? So it's, yeah, this race to build the data centers, and I explained earlier, there's like a order priority here. Again, you need the land and power, right? Once you have that, now I know I could go build a data center provided it's the right market location. And once I have the data centers, that allows me to again deploy and install the compute capacity that we need for AI. So again, you have to follow that sort of life cycle and go through it every time when you think about large scale projects. But the sovereign AI imperative again means that as a nation, I'm alleviating some of those scarcity concerns, and you're building independent AI capabilities. So that's really important for a lot of the big nations too, right? So you want to really maintain that AI policy and regulatory demand around data sovereignty. That's another one that I touched on earlier because again, owning that IP, owning the data is super important when you think about the success of businesses and governments, within certain markets. And then the other part too is that honestly, there's compliance rules that require you to have local data processing. So forget the need to just protect the data. You're actually forced to ensure that the data does stay on your nation's soil by certain regulation. So again, you look at all of that, you put it all together, and then you can connect the dots on all the announcements that you hear with billions and billions of dollars being committed by different countries. And depending what country you're in, some countries are saying, "Hey, I don't have really the technical capability or capacity to do this myself. I don't mind foreign entities come in and help me do it. I want to own it, but I don't mind people helping me." And then larger nations are like, "Well, I could do it myself, but I'd like to have presence in other markets too." So sovereign for them doesn't mean just building their own domestic capacity. It means going into other countries and building capacity there as well too. And we see that especially with a lot of the Middle Eastern countries. Now, with the US, for them, it's been a race of dominance, right? They have, like, the US has dominated AI space since day one, and they will maintain and want to maintain that dominance. So, again, definitely all the key points I highlighted around why sovereignty is important too to US, but maintaining that lead and being at the forefront of, AI technology, AI capabilities, and AI supremacy is probably again that unwritten thing that the US probably has in the back of their minds. And for Canada, it's really again protecting again not just the intelligence that comes out of AI, but protecting human capital. So in Canada, what we see a lot is a lot of brain drain, where you get really smart guys coming up, through the different universities and institutions, but then we'll leave Canada, go somewhere else. So sovereign for Canada, a lot of it is yes, definitely we want our own data centers, we want our own compute platforms, but we also want to maintain and keep talent close to home and help businesses flourish again, not just domestically, but on a global scale as well too. So if you enable innovation by democratizing access to this compute power, you do give businesses again chance through government funding or government subsidies to compete at the global scale as well.
Now, Craig, you mentioned these different packages that are available, and I've heard these terms like training and inference, etc., fine tuning. Which of these sort of packages effectively represents the biggest opportunity for BUZZ HPC moving forward in terms of return on investment effectively? Because you're spending millions of dollars buying these GPUs, so you want to obviously try and get the best return you can. Which offers the best return?
So yeah, the funny thing is, I'm going to say all of it, Anthony. If you think about the life cycle of AI, a lot of it today starts in hyperscale cloud today, where, folks have their traditional enterprise applications, all their back office systems, and more importantly, all their data sitting in like an AWS or a GCP or an Azure. And I think what we've understood and what we see right now is, folks will continue to develop their apps in hyperscale. But now when they create these AI specific mandates, this is where BUZZ HPC adds value, because we deliver a AI centric service. And you got to remember what our platform is. It was purpose built around supporting AI development. So, when we need a platform again that's simple to use, we're also about one quarter the cost of AWS. So again, now you're creating again affordable compute, eliminating again some of the scarcity issues that I spoke about earlier, and doing it for a fraction of the price. It makes a very, very attractive migration path for folks to say, okay, now let me take my data and let me take that runtime or that application that I started in cloud, move it to a BUZZ HPC, where again I could develop and do it faster because our platforms are tuned to develop models, to tune models, or run inference projects. But I could do it again at a fraction of the time. I could do it faster, and really at the end of the day, now again, once I move that data, I don't really need to move it anywhere else. I could do everything I need from an AI perspective in a single cloud, which is BUZZ HPC. And the difference between training, tuning, and inference is quite simple. So, that whole AI journey today started with us being able to train a model, and we call them foundational models. So this is where, we had to go through again large data sets. We actually had to create. We didn't have enough data, believe it or not, so we had to create synthetic data, and we had to train the AI, right? And that training the AI is again building those neural networks to really deliver the highest accuracy an AI can output. So, a lot of times you hear about all the GPUs required to go build this AI, but really, what are we trying to achieve? We're trying to achieve, again, the accuracy level that makes it available, commercially available for market and people to use. So, that compute capacity contributes to that too, because again, as I go through the process of training the AI, I can go through that faster, correct things, and adjust and update things if I have the compute infrastructure behind it to do it and cycle through it quicker. So it really becomes, again, a very simple method of, hey, the more compute capacity I have, the quicker I'll train that model, but the more accurate I'll get that model. So that's a very important thing to understand when we talk about training. When we get into tuning, this is a whole market that opened up where as a business, I don't necessarily want to expose, again, my proprietary or private data to, again, a public AI like ChatGPT. So in this case, I may not also want to, or I may not have the technical expertise to go train or develop my own model as well. And this is where, again, we've been very fortunate to have a number of open source models on the market to use. So again, there's an open source version of Llama, ChatGPT, and I could pull down one of these models into a BUZZ HPC cloud, and I could use my proprietary data in BUZZ HPC, because once you put your data in BUZZ HPC, it doesn't go anywhere. It stays within BUZZ HPC within our four walls of the data center, and I could tune an existing model with that data. So I'll do that because again, I've now really been able to accelerate my product development track by not, first of all, having to build my own model. I'm building and using, again, a very well-known model that's in the market today. And then I've taken my custom data to build and tune the model for the application that I need. Now that leads us straight into inference. So inference is, okay, well, now I'm going to host that platform. I'm going to, offer it as a, a UI or interface, or I'm going to offer it as an API. So the way to think about that is again your daily interactions with ChatGPT. So when you go to ChatGPT and ask it a question, it's going through again that neural network. It's going through a RAG process, or what we hear now is MCP as well too, being again a very common process. But it's going through again a constant state of learning to produce an answer, but at the same time to improve its own model. So that inference task again is the interaction or relationship that you as a user typically have with the AI itself, and you're querying it, it's spitting out answers to you, and then those questions and answers are really summarized into what we call tokens. And not to be confused with crypto again, they're not the same tokens that we refer to in Bitcoin or any other crypto-based platform. They're actually more similar to like a byte of data or a word, something that again you need to quantify with a metric. So a single word could be a token as an example, and I'm going to, or a group of words could be a token, and I'm going to ask the AI this question, and guess what? I just used a token to do it, and then the output that the AI gives me will be again a bunch of tokens or a bunch of data. And when you think about agentic AI, and especially how we've built in what we know now as reasoning models, they're long strings of answers and data, because the AI itself is going through this method of processing to say, hey, let me look at the best answer to give the user and the question that they provided to me, and it's doing its own internal reasoning on how to digest that question and spit out the right output to you. So again, what you hear about a lot, and what you'll see again is again that manifestation or an evolution of a token economy, where at the infrastructure level today, I sell hours on my GPU platform. So if someone wants to rent a GPU from me, I will charge them on an hourly basis a certain amount of dollars based on the GPU type. But as we migrate to this token economy, what I'll be looking at actually is the data coming in and the data going out. And I'll be able to monetize that on the tokens that are being produced. And we were with Jensen not too long ago in San Jose, just at a private event, and he had a really good analogy, because if you were ever in the infrastructure space, and let's say you were an IT director, an executive that owned data centers, they were a big cost burden on your balance sheet, right? So data centers have been expensive to build, and they're even more expensive now. And everyone is saying, "Oh gosh, yeah, how do I manage again this, this operating expense and this capital expense?" And you then, you're dealing with these massive cost centers that again become unwieldy just because of the capital intensity. So, Jensen really was able to qualify it and say, "Well, we're building next generation data centers now," and everybody loved the idea of owning a factory, especially a manufacturing factory, on their balance sheet. Why? Because they were very clear about how you monetize and created revenue out of it. So if you have a factory, you're probably building something and you're selling it. So whatever's coming out of that factory went to market, put it on a store shelf, and someone would buy it, and you make money, right? In this case, he created the linkage between the token, which I explained earlier, and the data center, because he said the data centers of the future are these AI factories. And the AI factories are producing these tokens with the compute power inside of the data center. So now you've taken this cost center, which was the data center, and turned it into a profit center. So anyways, it was really a nice way of kind of thinking about how, again, operators, owners are really monetizing these investments, and what will be, again, I think the case well into the future.
Yeah, it is an interesting analogy or comparison there, and I know we're getting close to the top of the hour, so we'll switch over to a few of the financial questions. This one, Anthony and I have kicked around a few times. With the rapid development of these GPUs, we've seen the H100s, the 200s, the Blackwells, all these different platforms coming out. How do you guys go about ensuring you get a payback on this heavy CapEx investment?
So a couple things. One, we do have a direct market channel where, yeah, we are signing long-term contracts on the platforms. And then the other half of the platform, we will go through resellers and channel partners that sell our capacity really on demand markets, which means that, folks are contracting either hour by hour or by day. And the longer term contracts, again, those are fixed contracts that will lock in for anywhere from 1 month up to 24 months. So you want a healthy mix of the two because again, you'll see ROI faster on both, where you have less volatility with the long-term contracts, but you'll have a higher, quicker payback with on-demand. However, it's very volatile as you move through your day-to-day revenues. So that's one way. The other way too is, we're not just an infrastructure provider, so we do offer a suite of services and solutions on top of our infrastructure. So we're further monetizing the value of our infrastructure because as you mentioned, it's a heavy CapEx investment. So what we want to do is always look at diversified revenue streams, one in the data center itself, two in the compute infrastructure, and then three with our software and our services that sit on top of all of those. And those come in the form of one-time services and white glove services that we deliver to customers. And then the other part of it too is sort of what we call a managed service that allows for customers just kind of give us more control over the technology layers that they need to build AI, so they can concentrate on developing AI rather than operating the infra itself. So again, those are great revenue generators for us across the board. And then the last component I'll just highlight too is we are abstracting a lot of the infra away from users in the sense that, when you run things like inference, we want to monetize tokens. So that token economy creates, again, higher margins for Buzz, but it creates a better customer experience for end users because, again, the token has becomes a new metric or a way of understanding how to consume AI.
In terms of I think the latest presentation we've seen from Hive, you recently achieved the 20 million annualized run rate for HPC revenues, and there's a target now which is 2026 to get to 100 million. Do you have sort of like sufficient capacity, GPU capacity at the moment to achieve that, or is it a case of as you grow, you'll get to the 100 million? Is it a case of customers, or do you still need to grow some of your sites to get to that figure? And 20 million to 100 million, that's like a 5x in terms of growth. Is that achievable in 2026?
Yes. So yeah, 100%. So again, we have a very, I guess, rigid mandate to get to that number, and it's through quarterly growth. So one, you're absolutely right. I feel like it's deploying more infra, deploying more GPUs, not just to expand capacity, but also to make sure that the market has, again, the latest GPUs available to them. So, if you look at our portfolio, you look at our GPUs in our fleet, we like to have Ampere-based cards, which again are more affordable based on the type of application user that wants to consume them. The Hopper-based platforms, which is your H100, H200s, again, there's a lot of folks that love those too, because again, they're still very focused on training and tuning. And then as we get into the Blackwell-based systems, they can still do the previous, but really excel at inference. So the answer is, yeah, we'll have a diversified fleet to be able to do that. We'll grow both from an infrastructure perspective or capacity perspective. We're deploying more capacity, and then we'll probably see that exponential growth again, thanks to, again, a lot of the service solutions that we're deploying on top of these platforms. So yeah, it is a combination of all of the above, and acquiring customers, again, would be acquiring customers directly or through some of our general reseller programs and partner programs. So yeah, we're certainly very fond, again, of all the partners that we work with, and we continue to really keep that as part of our core strategy as we kind of move forward.
Just as a follow on, obviously the type of model that you're using, which differs from the sort of co-location models that we've seen with CoreWeave and TeraWulf recently announcing, it's a lot more on utilization and capacity. How, in terms of like utilization at the moment, are you getting to the higher percentage levels? Because we're talking, everyone talks about where we are at the moment, where we need to be in the next four
Yeah.
years of growth. That suggests like everyone's clamoring to get whatever's out there at the moment. Are you seeing that from a utilization perspective in terms of the numbers?
Yeah, definitely. I mean, the last cluster that we deployed in Canada, we sold out of capacity within 3 weeks. Right. Then we had to race to add more capacity. So yeah, we're certainly adding more and more as we grow. CoreWeave is in a league of their own. I want to say again, the majority of their business is driven by OpenAI and ChatGPT. So they're seeing a lot of those large contracts come down that really carve their growth plan and growth strategy as well too. On the TeraWulf side, I'm not sure what they're doing on the GPU cloud in the GPU cloud space. I understood again for them it was more, hey, can I deliver data center capacity for guys like Core 42 that want to operate and run GPUs? So yeah, everyone has a little bit of a different business model. For us, again, I'd summarize it in a few key points. For Buzz, it was really around being sovereign. So, I explained that, especially from a Canadian perspective, what we're trying to do there. And it's just delivering secure, compliant infra for startups, enterprise to government. And the scalability piece is super important for us. Like we're leveraging our own power and land, but also partnering in key markets. And the big piece that I keep coming back to is sustainability, right? So, we launched our Buzz Green GPUs, which is really predicated on renewable energy and us running low, like really great efficiencies in our data centers. One, thanks to the cool climate that we operate in, but two, again, around our data center design, they're all liquid cooled. We don't have any water wastage. They're all closed loop designs when we use liquid cooling. So, we're not doing any kind of evaporative cooling where, we lose water. And we're going to maintain that solution-oriented focus. So, like I said, we're not really just an infrastructure provider, but we're offering differentiated enterprise grade services. We're with our platform with SLAs, right? So that's a service level guarantee that I'll give you as my customer to say, listen, I'm going to maintain and guarantee your uptime and performance, and I'll guarantee the support level, when you do business with me.
In terms of we've seen a lot of the miners now switching towards HPC. You one of the first ones to, and that was obviously because of the Ethereum mining left you with a ton of GPUs that you need to have something to deliver with them. We're seeing these, we've both been past that Meta data center a couple of times, and it's an enormous data. This is the biggest data center in Europe for HPC, and it's 150 megawatts. Some of the numbers that we're hearing in the mining space of these data centers with like 600 megawatts here and 1,400 or 1.4 gigawatts here. I mean, it's great to have you on the channel because you've been there and built data centers. How realistic are some of these numbers and to grow this level of size of data centers? When we see the biggest that are out there at the moment, are the miners effectively going to have the biggest of all the biggest data centers, or do you think actually we need to learn to walk before we can run a little bit in this space?
Yeah, again, you see different strategies evolving the market where I think some miners have said, hey, my asset is really the land and power, therefore I may be comfortable just contracting it to somebody. I mean that was the case where we saw early on a few early entrants, but then everyone realized, okay, well, if I build a data center, at least a shell, I can make more money off that. So then people got into, okay, I got the land and power. Now I want to build a building on it. So let me try to sell the building. And we saw a lot of that too. And then there were a couple of folks that, had the chops to do this. Not everyone has the ability to do this, but they said, well, what if I build out everything inside the data center too? So I'm going to do the full fit out and, deliver the water cooling to the rack, deliver energy to the rack, and have customers come in and be my co-location customer. Oh boy, I just made 30 more points on my margin compared to me just delivering a shell or just a land and power. And I have long-term value on that for my stock because now I'm getting like a 10x, 12x multiple versus like 4 or 5x multiple. So yeah, I think that evolution is happening, Anthony. Can everyone do it? No, I don't think so. Because again, land and power is specific to, the geography of market that you're in. So just because you have land and power doesn't necessarily mean it's an appropriate market to build a data center. And that goes back to what we were talking about earlier when we talked about training versus inference. If you're talking about AI only, but guess what? AI is only less than 10, 15% of the global's hyperscale capacity into the next couple of years. So there's 100 other workloads that a data center needs to recognize and maintain based on what they do. If you're talking about traditional data centers or even hyperscalers, so you'll see that curve grow where although AI workloads maybe say less than 10% of a data center portfolio, you'll see that probably reach maybe 30% in the next 5 years. So we'll continue to grow, but again, right now it's not, or in the near term or medium term, it's not going to be 100% of the data center capacity. So again, not everybody will just take raw land and power and convert it into an AI data center. It has to be very location aware. It has to be very workload and time aware. And that investment thesis really goes back to, again, who is my customer? Like, who am I selling it to? Right. So anyways, long story short, I think, yes, some that have great assets in key markets will certainly try to monetize and capitalize on that. And then others, yeah, I think there will be, again, longer evolution curve where, maybe, we start to see again, more and more power scarcity. Networks will develop, and then you'll see those markets become a little bit more, I guess, desirable to build a data center. So, long story short, depending what your strategy is and what kind of workload you're hosting, will determine the value of that asset.
Yeah. Makes sense. Hey, this has been a great discussion. I've learned a ton over the last hour. I wanted to give you the opportunity to close out if there's anything we haven't touched on, and definitely welcome you back anytime you'd like, Craig. This was a great conversation. Thanks so much again.
No, thank you. I mean, the only closing statement I would have is like, as we're seeing now, like sovereign is the new standard, guys. And, BUZZ has become a solution for that. So, sovereign AI clouds are really no longer the exception. They're sort of the new default. And they're built for compliance. They're really trusted by the enterprise, like I explained, which is, again, the really big market that's starting to take hold now. And they're really ready for, any kind of scale up and startup right to statecraft. So, we're going to continue to really push forward hard on that strategy and keep helping the cloud mature, doing what we do.
Awesome. We'll be here cheering you on from the sidelines. Thanks so much for the time today, you guys. If you have any additional questions, leave them in the comment section below. Hit the like button. Feel free to subscribe. We'll see you back here tomorrow.